What is going on, guys? Welcome on into today's stream. We have the recent Fed minutes just dropped, and the market did much of the same that we've been seeing the past like 2.5 weeks. S&P initially up this morning, or I guess into this afternoon, fell off a bit off of that, came back to about flat, and then is bouncing back. It's now back up 0.7%, so it's pretty volatile, I guess, if you think about the moves we're getting. Although, as we zoom this out for the past month, we're still in this chop fest. I mean, yeah, really since December like 15th and really the 16th of December, that Friday from a couple weeks back, we have not really been able to escape this range. You know, top of the range up here towards 386, 387, bottom down towards 375, 377. We've been just chopping around. So hopefully we get some better direction to finish off this week, but we shall see. So that's what we're looking at right now across the board. Let's pull this up. Some of the quotes from the FOMC meeting minutes, which essentially are just more details into what they were talking about a couple weeks back on their last FOMC meeting. What we got was this quote right here. Participants generally observed that a restrictive policy stance would need to be maintained until the incoming data provided confidence that inflation was on a sustained downward path to 2%, which was likely to take some time. Same shit. In the view of persistent and unacceptably high level of inflation, several participants commented that historical experience cautioned against prematurely loosening monetary policy. So it's the same exact thing. There's not much really new out of that statement. That has been the same deal. A number of participants emphasized that it would be important to clearly communicate that a slowing in the pace of rate increases was not an indication of any weakening in the committee's resolve to achieve its price stability goal or a judgment that inflation was already on a persistent downward path. I think the biggest takeaway that we've had really from this is quite simple, and it is we are waiting and just looking at the data. The Fed is going to say what they want to say, and I think that, again, overreacting to this type of stuff, and even the FOMC meetings going forward, that there's no changes, it's like, okay, whatever. We could see this coming from looking at the U.S. inflation numbers anyway, right? Let me see if I can. I think I have it saved somewhere. Let me see if I can pull it up on the tab. Pretty sure I got it saved. Yeah, there it is. There she is. All right. So, I mean, clearly on a downward trend the past like 6 months or so, really since June of this year. But the key is going to be, how this plays out, going forward further. So if I go back, let's see if I go back to 2021. Let's go to like July 2021. Yeah, there you go. It's a better zoomed out version of this chart. So yeah, I mean, we're not even back to 2021 levels of CPI and inflation numbers. So it's coming down. And we'll see where things go. It looks like forecast-wise, consensus we don't have the consensus yet for the next CPI that comes out in about a weekish from now, about roughly a week. Is that true? Let me just double check that. CPI release dates. Pretty sure mess next week. Interesting if it is. I guess, yeah, it's getting towards the middle of the month, I guess, as we get into next week, closer to that. January 12th. Yeah, so Jan 12th is the next CPI. Cool. So that's coming out on the 12th, and or at least this trading economics forecast, which has been pretty off, and it's been a little high each of the past two forecasts on the CPI. So if you keep that in mind, maybe that this comes in a little lower than that. Then we're looking at a 6 handle, so we're looking at a 6 handle next on the CPI, and oil, we look at oil and stuff, and that has definitely not helped keep the numbers elevated. It's helped bring numbers down. So that remains to be the same case. It just continues to downtrend, and might as well pull it up here. SPY in that range, and we still haven't gotten out of the range. I'm hoping though tonight, really in the future session tonight by tomorrow morning, and then continuation to the finish off the week, and some more economic data coming out in the next 2 days. I'm hoping we get a better move the next couple of days, because let's go back to that oil chart. That's $73. Here's oil today is down 5.5%, which is pretty incredible. But if we take a step back, that's a pretty nasty past 2 days. Oil just rejecting the $81, $82 range hard, lower high, and just continues to make lower highs. So to start this month off, okay, more lower highs. The beginning of December was pretty weak for oil. Hit a new low relative on the past 8 months, whatever it was. I think it was a new yearly low, if I'm not mistaken, a 52 weeker. We hit that because we haven't been down, roughly December of 2021 was the last time oil was down there. So pretty much. And it looks like based off this price action, if you were taking a guess, if you had to guess, does oil go above 83 or does it go below 70 in the next couple of weeks? It's probably going below 70 before it goes above 83 based off this chart. Of course, there could be news, anything could happen, but doesn't look too good. It looks pretty weak, to say the least. Now, what's really interesting is that while oil is weak and the market's consolidated, and you think to yourself, okay, market's kind of chopping around, oil is weak, that should pull, it should bring a damper on some oil stocks. Well, to be honest, it actually hasn't hit ExxonMobil as much as you would think. ExxonMobil, man, look at this thing. Building nice higher lows. And we got a trend line on there. It should pop up. Yeah, there it is. Higher lows. It bounced again today. And to be honest, Exxon, you would think on a day where oil is down 5.5%, and the market's choppy, kind of up and down, not really a true clear direction, you would think Exxon is going to be down. You'd think it'd be down substantially today, maybe 1%, 2%, dare we say more. But nope. It's strong. I mean, at some point, this is probably going to end, but it's strong as hell. Pretty incredible stuff. What's going on? What's going on, guys? Everyone's popping on in. Pretty good opportunities for me. I have just not been seeing things very well. Almost break even with BABA today. Wasn't buy stocks. Locked nice rate for a 19-month CD account. That's not too shabby. I mean, there you can get, there's a lot of accounts these days too. Even those high interest savings accounts, there's Wealthfront is one of them that's up near 4%. I think Robinhood gives you 4.5% if you have Robinhood Gold. It just on your cash these days. So you're earning decent interest on your cash, which is not a bad thing to be sitting cash, to be honest. If you don't really have a good feel for things and you're not comfortable with, where you're putting it. Of course, bottoms get carved out when, no one wants to buy and when, and so forth. But I don't know if we're really there right now. Who knows? Who knows really at that point? So a good mix of both is not a bad idea. Hold some cash, toss some money into investments and into the S&P and index funds and whatnot. It's a decent little long-term strategy that you don't really have to worry too much about. What I will note is that this risk on list above me right here, look at this. Affirm, ARK, Coinbase, Snap, Upstart, Shopify, Rivian, Palantir, Mara, the crypto miners. Mara's up 25% today. Look at this chart. Look at that. It thing got annihilated the past couple of weeks, but it's the same deal. Really good volume. I would be watching this one, to be honest, the next couple of sessions. This is a high watch for further upside because this volume today is pretty incredible, and it lines up similar to some of the volume that we saw kind of out of nowhere that began the last big move from around $5-6 all the way up to about 18, which was killer in a couple of months, about a week and a couple of weeks, really about a month and a half, not even. That I did that. So watching that, we'll see what happens around this $5 range, 5 to 6, and then we'll be watching that one closely now as it had a huge day today. So keep it on the radar. Hit the max loss today. Really good trade some hyper account. Want to trade more? For me, I had another dud. Surprisingly, I'm still flat. I think I actually might be up a few bucks in the week. But I have just felt like just not feeling it, not seeing things very well. I think the chop is really throwing me off. And I think that it's a good lesson to learn. Of course, in my past self would probably have, I don't want to say blown up, but I would say more so my past self would probably be more aggressive and keep pushing. Whereas now I'm like, you know what? If I'm just not seeing it, I'm just not seeing it. I'm not going to hold this because I think it's going to just, I'm going to take the L and move on. Because next week, right, could present some really good opportunities that I see very, very clearly and that happen to be, stuff that fits my style. And you can crush, 3, 4, 5 plays in a row, boom, 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 that, completely flip the script on the past couple of weeks. So it's staying alive in times where you don't really have a good feel for things. And right now I'm just observing more so. And from what it seems like, it's choppy across a lot of large caps, but across some of the mid to small caps and the growth names, they're very strong today. And I'm really curious to see if that continues to hold into the next couple of sessions. Also, on top of that, oil stocks are strong, but oil is weak as hell. So something's going on there. So, it's just kind of weird, wonky action, in my view, across some things, which there's always going to be weird, action. But observing that and keeping that as a mental note is not a bad idea. Just so you're aware of that and you don't get caught up in why isn't this doing this? I thought it would do this, because it doesn't always work out right how you think or how it had previously been behaving. Coinbase is up almost 12%. It's pretty impressive day to day. So Coin's done pretty well, although, relatively speaking, that chart's pretty bad. But again, like we've been saying, right? Like Coinbase is up 12% today, right? It could do 12% again for the next 6 to 7 days, and it would still be nowhere near, right, where it was earlier this year and late last year. So the potential for the rebound trades in these like risk on, or I guess somewhat more risk on periods, shouldn't be discounted, because there's still opportunity for the short term. It doesn't necessarily mean it has to be a long-term idea, but for the short term, they'll be setting up and they'll be looking good. I like Coinbase as long as it stays over 36, 37 bucks. If it can hold that going forward, it looks pretty good to me. Quad U. I haven't looked at it super close because I'm looking at it now, but let's take a peek. That chart looks a little interesting. You're just kind of consolidating like the past couple of months. That's a big picture bull flag type of setup almost. It's uptrending, so not perfect. But yeah, it is in this like 2-year consolidation from like 450s to 10. That's a big consolidation. But it's been this big time consolidation. So you got to see this thing start to break down 560s or start pushing up over 7, man. Good bounce on Chinese stocks. Yeah, check this out. If you guys remember a couple months back, YINN. We talked about yin. This is the 3X China Bull 3X ETF. So check this out. We joked. I don't want to say we joked, but we thought about like where this could potentially go in terms of like a legitimate resistance. Big picture. We're not talking, day to day. And we were looking at this thing when it was down sub $25, and I think we were looking at it on days where it was down under 19 or under 20. I think it didn't go under. It went down to a low of, let's see, pull this up. Went down to a low of 1966. It's currently going for $60.50. I think I sold a put on it and I made a few bucks at the time. This is back at end of October, but that's a return of about 200%. And not saying that, it would have been easy money, but that's an example of taking advantage of some of these leverage ETFs. Instead of putting an option expiration date on you and having theta decay and stuff, yes, will you have decay when you're playing leverage ETFs? Yes. But that's an example of it kind of working out pretty nice. And you can sell covered calls along the way to hedge your downside and make a few extra bucks on the upside. So that's the perk of it, which is pretty cool. But that's a killer move, man. In about 2 months, the thing goes 200% and it's not a penny stock. So that's pretty cool. Fed minutes. The Fed minutes popped through and popped out, and the market kind of chopped around from that, but didn't seem to. There's not much of a change. I'm not surprised. Like in these Fed minutes, like were we expecting all of a sudden to see something crazy? Like no, Powell is getting grilled on his press conferences, and he's saying what he's got to say, and he's getting questions that people want answered, and he's answering the questions. And so it's like, okay, when you get into the Fed minutes, there's nothing, generally there hasn't been anything like crazy inside these minutes that's like, oh my gosh, completely different from what Powell said, or it's completely changed our view. they've been saying this for so long. They've been saying that they're going to leave rates, just because they're slowing the pace of hikes, doesn't mean that, they're going to start backtracking here sooner rather than later. It just means that they're slowing the pace of hikes, and they're going to slowly kind of ease us in and ease us, into a nice, top line number that they want to keep us at. Observe the data, and as the data comes down and the numbers come down inflation wise, then they'll, eventually have to make an adjustment and make some moves. That's what they're saying, because they don't want to be seen again as flip-flopping back and forth, and they don't want us to, they don't want people to start panicking and thinking that they did too much. And so they're going to keep saying these things until they have no choice but to not say them anymore, and they have no choice but to act in a certain way and have to answer the questions because of their actions. So until they have to cut rates, whether that's a good or a bad thing, right? Whether it's they're realizing that because they've essentially screwed us or whatnot, they're not going to say that they screwed us. And because a lot of the data that they're looking at, a lot of the job data and stuff, still looks decent. It still looks good. I mean, let's jump into today we had some job data, I believe, right? Yeah, job openings came in at 10.5 million versus an expected 10.1. So more job openings than expected. So the job market, across other metrics, there's more metrics to look at here, but Fed's looking around like, all right, cool. We're still good. Nothing is drastically freaking us out just yet on that front. MU had a fat move today, upgraded. Yeah, that moved a couple of stocks this morning. I saw a couple of different upgrades or downgrades. Micron off of what was really interesting support right there at this 48.50, right back up. Big move back up a Micron. So that's a nice pop. BABA TA. That's a big move on BABA. Yeah, I mean, and we see that in the Chinese ETF we were just looking at. But that's a big move, man. Let's see. So it broke out over this zone, which was pretty key. Consolidated up around this 85 to 90 and broke out. Now it's up over that 100 psychological level. Let's look at this. Key spot right here that's just barely breaking above now is around this 104. So close over 104 would be cool. Over 105, even better. It seemed like that was a resistance a couple times the past couple of months, really the past 6+ months. That's been a spot we've been watching pretty heavily on BABA. So keep that one in mind in the back of your head. But it's a big move, right? On these names, be cautious about these big moves. This is definitely not the environment or the market to be chasing any of this crap. Because we see how this thing goes. Today SPY is up, tomorrow it's down, the next day it's up. It's just absolute chop city. But it looks like it's trying to come out from the depths. Let's see if we can draw a trend line off this big move down. Not perfect. That upper trend line. We're getting close though. We're getting close to that big time upper trend line, which really began late 2020 on Alibaba. So that's up around this 108. So we're getting very close to that. So I would expect there's going to be some resistance up in here. Right? We're pretty much where we're at the next couple of dollars. I would expect some resistance unless this thing's got more legs and wants to make a push. Spying cues are pretty boring. Yeah, IWM is definitely stronger than the two of those guys today. IWM is up 1.36%, whereas QQQ is up 0.35, SPY is up 0.64, and the Dow DIA is up 0.23. So the Dow is not really too strong, but it's not really, when the market's weak, the Dow is generally not that weak either. So the Dow is kind of just in between. IWM looks like it's trying to curl out of this range. I think a lot of people are going to be a little bit caught off guard if we do move up, and I think keeping all ideas or all options open is a good idea, because a lot of people looking at these charts and they're saying to themselves, what does this look like on SPY? This looks like a bear flag. A big move down followed by a consolidation generally leads to a lower push, especially in, bear markets and, tough environments like we've been seeing now. So I think that's where a lot of people are maybe, expecting. They're expecting that to happen. There's no guarantee. And if we kind of curl up from here and start to inch up, then I think you don't want to be blind to that move and just be forcing shorts because you're like, no, it can't. Well, it definitely can. My biggest surprise is XLE. I really think this is a surprise to me. XLE the chart looks very similar to ExxonMobil. I prefer playing ExxonMobil. It's a little, it's up to you and how you want to play it. but I like playing ExxonMobil if I'm going to trade an oil or an energy play, right? XLE, you can play the overall ETF too. But this has got some really nice support on XLE. I'm going to put an alert here just so I get alerted to this. If it was to drop down under, I'm going to put an alert at 83 just because it's a couple cents before the lows of the past couple of weeks. Let's see. Add an alert. I'm going to go 83 flat crossing down off 83. Just so that I'm alerted if we do break down on XLE. But it's been I'm surprised how strong it is with how weak oil, like the charts look so different, drastically different on XLE, the S&P, and oil. Like it doesn't even, like, it's not even like you can look over at XLE and say, oh yeah, the reason why it's up is because the S&P has been super strong. And so despite oil being weak, you have the S&P super strong, but that's been the complete opposite. And I think there's a lag to this as well. I think that, companies with higher energy prices that did well, maybe do well for a bit. It's reflected in a couple of earnings to come, and then it starts to kind of roll over into next year maybe. We'll see. But I think that there's still good opportunity, I think, in the energy names, especially if the market's weak and oil stays this week. There's opportunity for a downside there. I sure as heck am not interested in buying any of these things long, even though they do pay, a lot of them pay decent dividends. XLE pays you a 3.82% dividend. This is the ETF. You don't have to just own an individual stock. You own the ETF. You're diversified, and you get almost a 4% dividend on top of a stock. Now, could the stock drop 20, 30% at some point if the market's weak or if oil stays, on this downtrend? Oh, it sure could next year or next couple of years. So your returns might not be the best, but you're at least getting paid a dividend, I guess. What advice would you be for someone who's holding crypto for a while? ETH, Bitcoin, been red for a while, sell. My take on it, as I'm not someone who's like super big into crypto, nothing against it. I just had never really gotten super big into either trading it or really investing deep into it. I guess it's not proven as much to me. So I'm like, I dabble. I have some money in it. I have some money in Bitcoin. I have some money in Ethereum. In some accounts that I haven't logged into in months at this point in time, but I'm not really interested in getting rid of it at this point. Like if you have a lot of money, though, you have to think of the opportunity cost, and you can think of it a couple different ways. If you see that there's a bigger cost of you not selling it and doing something else with that money, right? The decision might be to sell it and move on, right? But if you think, I don't need this money. I still believe in these things, the next 10, 20 years, right? Or next, 5, 10 years, right? 10, 20 years, I feel like it's for a lot of people, it's too tough to actually conceptualize. But there's no reason to sell it if you believe in it. There's definitely gonna be value. I don't think that, all these different coins are going to have value, but the big names, I think will be staying around. They're not going anywhere. Probably Bitcoin. I would imagine Bitcoin's probably the safest play in my view. Who knows? Maybe I don't know. I'm not a very well versed in the crypto space, but I would be looking to pull up the charts too. I would not be selling. I'm not selling in any of my stuff, but I'm not holding an amount that I either can't afford, to lose / that I'm not willing to hold on the way down if it does go down further. If it does, if we start going under 15K, I would start to be a lot more interested in maybe opening those accounts again. Or, logging back in and starting to set up some recurring buys and starting to set up some buys or put some money into that I can afford at the time, just to start, adding in while it's getting destroyed, while it's getting beat down. And Bitcoin is very volatile. Obviously, we have no really way to necessarily value it, I guess, perfectly. It's very difficult. Like a stock, you can say, fundamentals, technicals, and this. Bitcoin, you can use technicals for sure, but the fundamental side is very, very new, and it's not like we've been doing this for 50, 60, 100 years, and we can easily compare this to other situations and whatnot. So it's a weird spot, which is why I think it's like much more, are you someone who's believing in this thing and you want to hold this, and can you afford to put this money here and have it sit for a while, But if you look at the cyclical nature of it, let's look at the past couple of years. Each of these candlesticks is a week, right? This thing had gotten crushed back in 18, went down at 3K, then had the run to 60. So the volatility is insane. And ideally, right, if this thing came down, and dare we say it came down into like this area, sub 10K, like, yeah, it's going to hurt a lot of people who bought up in here, but it presents a potential opportunity for those who potentially buy here. And again, like we were talking about, I think the end of the last stream, what we're looking at, I think we looked up a Michael Burry tweet, not that we really care about the guy or whatnot, but we're looking at the concept of his tweet. And the concept was that I don't think he said it was, he might have said it's to something along the lines of it's easy. And his concept was the Fed is going to cut rates at some point. We're going to be in a recession. They're going to cut rates. They did too much. They're going to cut rates, and they overshot it just as they misunderstood the impacts that they had on inflation going up. They misunderstood the effects of their tightening on the way back down, and they're going to overshoot, go to recession, and then guess what? They're going to cut rates. They're going to stimulate the economy. There will be some money pumped back into the system, and then we're going to have higher inflation again. Now, the thing is, that's a whole cycle. So inside of that, right, coming out of the recession time, coming out of that period, you can go on a nice run. And so if that lines up with Bitcoin as well, and coming out of that period, a tougher period, just like the market and whatever, you have a really solid run where risk on assets do very well, growth stocks and just growth assets in general do very, very well after, a substantial decline. You'll have the same cycle. And based off of Bitcoin's history, one could potentially anticipate that it might go higher than this past cycle's highs and maybe eclipse 100K, maybe go for more, who knows? But that's kind of my big picture take on it. So it's cyclical in my view, and that we're just kind of waiting for the cycle to play out. This is the cycle that we're in until the current economic policy starts to be more supportive of risk on assets. It's going to be tough. It doesn't really matter. It's going to be tough. Don't mind the range trading. I mean, it has, to be honest, is one of those things that I feel like I've missed out on, because you'll find yourself and you realize, what was I doing wrong, right? And the biggest thing for me, past couple sessions, has been trying to anticipate what would happen. That's like one of the biggest things that I've been like doing wrong, instead of just like observing and reacting to what's currently happening. Because at some point, the range is going to break. Might go back to the S&P. At some point on SPY, go back to the past like 1 month chart. At some point, this range is going to break, right? We're either going to go up or we're going to go down, right? At some point, the exact time of trying to pick, like, is it going to be this one, right? Is it going to be this one? Is it going to be this one down here? Was it this one right here? Like, waiting for that or trying to guess at the exact time or picking the time, right? It's almost a gamble until we have confirmation of a breakdown, retest, rejection, and then go down lower, or break out, retest, support bounce, go higher. That's what you're waiting for the true confirmation. But if you just play the range, man, it's still working. And the longer that we stay in this range, the less likelihood that it's going to keep working. But for now, it keeps going. It keeps on going. Bought shares of Mesa, tried to cover calls. First attempt on them was no interest at the time when I tried. Now, let's take a look. Let's take a peek. Let's see. Why is it not typing it in? Oh, I keep typing the wrong stock in. Weeble's being all wonky on me. Let's take a peek at the option chain. So here's Mesa's chart. Another 10% day, crushing it to the upside. The problem with it now, though, is that obviously, you're up 100% off the lows, and it could go more. It certainly could. But ideally, a pullback would be a much better opportunity. They have monthly options. Let's see. The 2.5, the $2.50 have about 2,300 open interest. You could probably get those covered calls sold for 5 cents. Maybe you can put a couple at 10 or put one at 10, and maybe someone hits it because the bid is at 0 and the ask is at 10. So 5 probably splits that and gets you paid. That's for January. You got to February, different story. You can get paid on the $2.50 covered calls. You can get paid 20 cents. Not that much open interest, but there's some. There's a couple hundred. You got to April. There's a lot more open interest out here. And you can even get paid on these $5 covered calls. You can get paid between 5 and 10 cents on those as well. So when the stock starts going and starts getting more volume and starts moving up, yeah, generally you're going to see more volume in the option contracts. And so generally speaking, this would be a better time. The only problem is that, are you willing to deal with a backfill if it fell back off, back towards $1 or back down 50% from here? And is it worth it to sell the covered calls? Unless you think we're going to go way, way higher, which it certainly could at some point. It definitely will. This has been just beaten down to a pulp. But it's kind of one of those names, I think, too, that it's like it got kind of lost. Like, no one's looking at this thing, and it's just kind of floating down, down, down. And should it be worth $2? I don't know. I haven't looked at the fundamentals of it. I haven't looked at their numbers and everything. But it seems like their market cap is down to 72 million. That seems pretty low to me from what I looked when I looked at the stock, about a year ago, maybe over a year ago. So something to look into deeper, I would think. I sold a little bit my SVIX. I didn't have that much, but I sold some SVIX, which is essentially shorten the VIX. I bought it at 14, and I got my sell hit at 15. I'm just going to slowly sell, small chunks of my position as it kind of inches higher. Or my stop loss is at 13.50. So we're pushing higher on SVIX. Essentially, the reason why I got into this was because I was watching the VIX the past couple of weeks, and it just seems so weak. Every attempt to go higher, it just gets sold. It sells right off. Every attempt, it gets hit right back down. So I was like, okay, well, how can I short the VIX without having to worry about options and do that? I can just go shares. And so I bought shares of SVIX, and the thing moves pretty decently percentage wise. So you can size in however you see fit. And I size into a comfortable position and have the stops in place, have the alert set in case we hit them, and that's it. So for now, I'm riding this. Of course, when you're dealing with the VIX, it could spike at any time. But I've started to sell some. I started to lock in gains, and my stop loss is down here. So I'm pretty much essentially stopping out break even roughly because I've taken some profits off. And so the stop loss is down at a level that I was fine stopping out on the entire position anyway. But it's down towards the lows of December, the mid-December, and then really this December 22nd, Thursday, that's 22nd, that low. That's the stop on it. Microsoft, I was watching Microsoft, and I had the alert set. My alert triggered at the open because it was down into the gap. The problem was it gapped down a lot, and then I just wasn't super interested in shorting it further after it filled that gap, which was at 229 roughly. It went down to 226, and it's just kind of actually rejecting that 229 now and bleeding off again a little bit more. But yeah, that was a big move down. So Microsoft's daily chart. Yeah, see the gap, it'll pop up here. There was this gap right here. We can pretty much get rid of that. Well, there's technically a gap up to fill back in from 332 up to 337. So there's some big moves, and Microsoft making some big moves each day. It's down $12 today. Talk about a nice mover. That looks pretty bad. Although, right, coming down towards the lows of the year, be careful, especially if the market catches a bid. If SPY catches a bid and we start inching higher, this doesn't necessarily need to go to make a new low, even though it's weak today. So we'll watch that. SPY's breaking down a bit here into the close. Let's pull that up. Still up technically on the day, barely, but it's breaking down a bit. I really hope we get some direction, man. I really just want to see some better direction off this because it's just been brutal to be in this range. But I'm hoping that we get some not after hours, more so overnight move, and that kind of gives us some better continuation to some direction. Or we got to move a lot. We're in the middle of the range. We're right in the middle of the range right now. So even if we finish the day red, we're still kind of in the middle of the range. You got to make a pretty decent move, $3, $4, $5 to the downside to break this range, the low end. I think we were for sure heading towards a recession. Noticeable slowdown. Yeah, I'm seeing it even further, right? In my girlfriend's work, yesterday she came home and, they had another kind of cut. They weren't cutting necessarily people, but they're just we're not back after someone leaves. We're not filling their role. Travel budgets and all these different things are all getting cut. So it's slowly but surely, it's really happening, bleeding into things further and further. Despite, the job market might look or seem from the Fed's eyes or based off of certain numbers, okay, it's it's not as great maybe as it had been a few months back. Problem is impulsiveness, I think, and as I was looking deeper and diving. I'm reading one of these trading psychology books right now. It's by Jared Tendler. It's The Mental Game of Here it is. I got it wet one day. I was at the pool, and I sat down on. It's like you can't really tell, but see how it's like all the water stains. And for me, yes, I like to keep my stuff nice. I don't want to. That's just like a weird that just sucks. Almost makes me want to buy a new book, but I'm not. But yeah, it's like essentially I'm reading a lot of that into that, looking deeper into other people who've been doing it for a long time. And one of the biggest things you come away with, and one of the biggest mistakes or flaws that people have or that you'll see in a lot of people, is that impulsive behavior. And it's like we all have this like almost desire, this need, this like urge to just take that. It looks good, take it. This looks good, take it, without taking a second to think. Now, that doesn't necessarily mean that it's terrible, because sometimes it'll work, right? But the problem that I've found in myself, maybe you'll find something similar too, is that if that's the case, you end up doing stuff it might be a good idea, but you just make those other mistakes in either the position sizing, or it's a stupid error. You click on the sell instead of buy, like stuff like that, or you go with a put instead of a call, like stuff like that impulsiveness leads to, which without realizing it is actually like what's causing those bigger losses versus, okay, yeah, you're impulsive, but you have a stop, or you respect the stop, or you recognize it pretty quickly. Okay, you can get out of it, cut the loss, move on, and it's a minimal loss. But sometimes the bigger mistakes come from, for example, when you use like the Webull, the price ladder, if you had previously used a size of, let's say, 10 contracts, it'll leave that in there as your size. Then you go to a different stock or a different option contract, and let's say you're playing contracts that are a lot more expensive, and you click on the price that you want to get in, it's going to put the order in for 10 contracts unless you go back and change it. So like I've made that mistake a couple of times where it's like, oh my God, and then you end up, in a huge size position, or you are in a tiny position for something that works out, and you don't realize it until after the fact or until it's too late, and then you missed a great gain, or you missed that, or you had a huge loss for no reason. So it's like little things like that. I think the impulsive behavior or the impulsive nature or the desire leads to, that is actually much more detrimental than we realize. But that's causing a lot more of the issue than the actual impulsiveness itself. Obviously, minimizing that is great, but the problems that come from that you wouldn't have otherwise made are really where the problem, at least I'm seeing, lies. If I would have waited, I would have caught. Yeah, I've been kind of in that same kind of feel. I have this one position on MRO, but it's like flat. Flat for right now. But I don't want to be like forcing, puts when on stuff that is holding up with relative strength and not going to hold overnight. I'm still holding that small natural gas position. It bounced back today. I'm looking for a gap fill on that gas. So I have a contract out. I have contracts out to January 20th, I believe, is the expiration date. So I had a bounce today, kind of put in a double bottom look almost. I'm looking for a fill back up to about 435, 430-ish. We get 425. I'm probably going to just call it on that trade. It got hit pretty hard yesterday. Also was news of over in Europe, warmer start to winter. Of course, those forecasts are ever changing, as I know, as I literally have a background in that stuff. I'm not playing too deep into the cold winter, all that stuff. This natural gas is bearish. I wouldn't want to buy it. However, I would absolutely no way in hell want to short it right now after the move that down it's had. I mean, no way. So looking for a gap fill move back up to 435-ish. And as long as it holds these lows of like 380 or so. And that's really it. But outside of that, that's really all I got. Outside the small caps and the SVIX, but those are kind of minimal that have been just like in the background that don't really have any time expirations on them. So I don't really care. I'm letting them do their thing. But the small caps today, let's check in on small cap land. We had a VVOS is up 162%, falling off a lot now. CRKN 76, TYDE. A lot of these things seem like they popped and then they fell off a lot. VYNE had like a pretty solid day, up 100% at one point today. There were some good moves. It's still the volume and the heat is still there. GREE, check this one out. GREE was another one of those that we had on our list that we found a couple weeks back. Finally went today. It's up 32%. It was up more. I think it was up closer to 50 if I'm not mistaken. Let's see if I can pull up the 15-minute chart. Yeah, they pumped it off of just some volume intraday and midday. The thing went from like 27, 28 cents to 50 cents. It's a big move intraday. But volume, I wouldn't, after a pump like that to me has, and I haven't been following. You'd have to check on Twitter and stuff to see. And of course, it doesn't only happen on Twitter. But to me, when you get a move like that just looks like a pump and dump. It looks like somebody on Twitter with a sizable following tweeted this play out. With the early volume right here that didn't move the price that much, you can see that somebody loaded shares. This thing was trading 81,000 shares, 69,000 shares, 72,000 shares, and all these candles right here before the big move. Then it goes from 30 cents to almost 50 cents. And, the thing then trades 2.2 million shares in a 15-minute candle. Boom. I'm sure whoever was loading it prior dumped into your face or dumped into people's faces or dumped on the way up of that. Potentially, if that's the case. It could just be someone who bought a ton of shares and just like slowly was buying, and then it hit scanners and people started swarming in. Or it was a tweet or it was mentioned somewhere that brought in the volume. Most likely, this has the type of look of a classic pump and dump that a lot of those guys are potentially going to be going to jail for, from the Atlas clan and all that crap from past couple of years, which is I don't think it's funny. It's not funny because the people who got burnt by it, although lesson learned, great. It's not funny at all, and those people could rot and hopefully never do this shit again. But they probably made plenty of money, and who knows if they're going to get off. They'll probably get off on a lot of it, for all we know. But all when you read through that document that we talked about, I think we talked about it a couple weeks ago. If you read through that document, what you'll see is the way that they were talking behind closed doors, so to speak, says enough. They didn't give a shit about any of their followers. They did not. Whether they want to say it or not, they did not. And it is what it is. They'll never be able to come back into the space and garner a following, you would think. I mean, I wouldn't think. Tesla is surprisingly strong today, I guess. It's just holding above VWAP all day long, a nice little uptrend, and just keeps doing its thing. So Tesla's just chilling. It's just doing its thing. It's nothing crazy. Tesla's daily, let's go back the past month on Tesla. We hit up to that 125 area, 123, 124, which was an area that we were watching because, we had previously had a lot of consolidation there, looking at that as an area of resistance. It has acted as resistance, and now we've rejected it off of that level, and now it's trying to squeak itself back up. So put in a lower low, and let's see what it wants to do. It doesn't look too shabby. It looks kind of strong, dare I say, kind of strong as of now. Take the time to think things through. Yeah, I mean, sometimes when it's just making sure, stop, everyone, if you are a scalper, it's different. Everyone has a different style. If you're a scalper, then you got to have these settings. You got to have your hotkeys, all this stuff kind of set up ahead of time so that you can't make those stupid mistakes intraday, when you're scalping. But if you're not a scalper, I'm not a scalper. If you're not a scalper, then just taking the second to, this looks good. Draw out my risk reward. Here's where I'm going to take my loss. Here's where I'm going to take my gain. Let's see. The sizing is correct. Great. 2 seconds. Okay, I'll enter it. Just taking the extra 2 seconds, sometimes, is all you really need. Just to minimize a stupid mistake. Getting better at accepting the defeats when I hit the max stuff. I think too, a big part of that is recognizing and understanding and truly accepting the risk. But it's everyone says that crap. What do you actually mean? But when you actually get to the point of I really don't give a shit about this trade. This trade doesn't matter. It's what matters is the next 20, the next 30. And if this one blows me up, but the next 6 are great and they work, I'm not going to be in the game to take advantage of those next 6. You know what I mean? It's a simple concept, but it's also a lot more difficult once your money's on the line and you start playing the game. They pump the penny stock, so they suck. Well, I think some of them actually maybe were decent, and unless maybe they weren't, and just give them too much credit. But the penny stock pumps, and I think reading through some of the discussions that were posted in that SEC document, pretty much tell me and disclose to me and all I need to know from those guys, because they actually had no effing idea how to trade. And I think that, to be honest, as much as okay, they made a lot more money during that span than I think most of us, definitely at that point in time, the reality was that they were just scalping this stuff. And they could scalp with high probability because they knew that they would be able to tweet about these things, and they could just dump into followers, and that's the followers would supply liquidity to dump. But the reality was that they didn't a lot of them said that they're holding for a swing. No one would swing. They weren't swinging shit. They weren't taking swings. Whereas when you actually take a swing, there's a lot more that comes with swinging a penny stock. And we've had a couple swings even the past couple weeks that have killed it. Couple 100% from the lows to highs. Obviously, you're not going to have the whole thing, but from my average on JSPR, the thing was up 200-300% by the time I sold my last bit of shares. That's sick. That's sick. And there's more of a skill behind that than, obviously there's luck involved. You don't know how much it's going to go, but there's more of a skill behind that than what those guys were doing, because those guys were just literally picking one that looked good. They would do a little bit of DD. Here's my DD, and they post a little bit of investor presentation, which we all freaking know is bullshit in penny stocks anyway. And then you post the DD, and then there it goes. They start pumping it up, and they just have already loaded their position, and they just unload their position into you, and everyone else is buying, like an idiot. And then you're buying it. You're like, why is it not breaking that resistance? Because there's a fat seller right there, and that's them dumping into you. But it's kind of behind us, you think, at this point, and I'm kind of glad that stuff is it's all getting washed out. It's taking its sweet time, but it's all getting washed out. Alrighty, I want to look at those oil stocks really quick and see how that's finishing the day. Exxon barely down, MRO down a little bit more, a little weaker there, but Give it a second to load up. Marathon Oil. 10 minutes to go into the close. Interesting action. When you watch volume, I think it's also fun to watch volume sometimes. And when you get some big surges in volume, but not much price movement, it's generally not a great sign. What's happening in bear market? All the garbage gets cleansed. Yeah, I think it's a good thing. It really is. Because we don't need that crap. Seriously. And even the people who are charging for those groups, and I've been seeing a lot of people on social media that these days there's a lot of controversy across different journaling or tracking softwares that people are posting a lot of screenshots from, and it's not accounting for fees, their brokerage fees, locate fees, and whatnot for different styles of trading. And so they're posting these crazy percent gains, and people are like, oh, wow. And they're going to buy their subscription or whatever. And then people are like, yo, this person, is posting these crazy gains, but how much of that is actually fees that's getting taken out? This platform's not tracking, It's a lot of that crap too, but everyone has an incentive. And I think that a lot of those guys too, just we're hungry for the followers and we're hungry for the attention at the end of the day. But, that's how it goes sometimes. Look at this. Papa John's, man. This is a wild one. Much more. I was looking at the options, though, and there's nothing that I could even get a look at that even looked remotely doable from at least my perspective today. Spreads were huge. Not a ton of open interest from what I saw. But it broke down under that level. Then it came right back up today. So it snapped below big time yesterday, and then it came right back up, and it's back at $82. Just like that, after being at 77 yesterday. A stock that no one really talks about because, who cares about Papa John's? But, geez. The Shaq-a-roni. I got one time. Gross. I was not a fan of the shakaroni. It was pretty nasty. It was a lot more disgusting than I thought it was going to be. And it kind of turned me off. I haven't been back since. Papa John's cooking the upside. Yeah, maybe they're cooking something else other than the shacaronis, because that thing was... Or maybe I just got a bad one, for all I know. It was like midnight on a random, Wednesday or something like that. And since I live where I used to live close to college campus, University of Texas, I lived kind of close to them. It was kind of closer to their campus, which is probably a big part as to why it was terrible. But Papa John's kind of nasty. Yeah. I mean, we've been doing a lot. The problem that we have is that we've been trying to make our own pizza. Go get dough from Whole Foods, or getting dough from, grocery store or whatever. Around here in Texas, HEBs or whatever. You're getting a dough, like a pizza dough that you just make at home, make yourself. The problem that we're having is that the period of time where you have to take the pizza and transfer it to the stone, because we got a pizza stone, is it destroys the pizza. Because I'm sitting there, I make the pizza, I put some flour down, whatever, so you can so it's not getting stuck to the counter. And then you're like, okay, well, now I got all this stuff on the pizza, but now I got my pizza stone. The problem with the pizza stone is that you can't take the pizza stone and put it into a hot oven from cold. So it has to be hot, or it has to be warmed up, or else it'll crack. So it's I guess you got to heat the pizza stone up, take it out, put it on the counter, and then put the dough, make the dough, put it on top of that, then make the pizza on top of that, and then put it in. I think, although it would take a couple of minutes between when you take it out, I guess it's not a big deal. I'm just trying to figure out the best way to do it, because I had a couple of experiences where I was trying to do it alone, and you're holding a freaking hot stone here, and you're trying to shimmy a pizza off the counter. That's the dough is, bending and moving around, and all the toppings are falling off, the sauce is falling off, and I'm trying to put it on the stone, and it's a mess. Boys over at Wingstop, let's take a wing. Some funny stocks out there that you don't realize you could trade, but what's Wing doing? Wing's up today. Fill the gap back to the downside, but it's up. It's up today. 2%. Actually, it's an inside bar day. That's another mini little pattern to look at too. We are completely inside of the entire range of yesterday. And so a break out of that range tends to signal a big move. So, you can put some alerts on some of these stocks that you've been watching and just wait for a break. All right, well, I got to get rid of this stupid MRO position. Let me just dump this guy. Okay, that's out of the way. Oh, man. This week, let's see, am I even up this week? Let's see. Despite having a nice, what is today's, this is the first of the month. January 3rd was the first trading day of the week, I believe. Yeah, I think I'm up maybe a few dollars, literally $10, something like that. Today's the 4th. We were up, I had the wrong dates. How does that make sense? Oh, I picked 2022. Geez, man, Weeble's messing with me here. 2023. We're up $84. That's actually not as bad as I thought. Or that's better than I thought. I mean, we're up $84 this week somehow. Even though I don't think I've had more than one winning trade. Outside of the swing. I had the swing that helped. But outside of that, I've just been chop, chop, chop. But in the past, I would have been way, way more red than I have. Just kept the losses super, super small for all the losses that I've had. So I can't complain with that. And hopefully tomorrow's a better day, because tomorrow we've got maybe a push. If I had to take a guess, the 10-year also came down a bit today. DXY is just still in the range. Here's DXY, the dollar index. It's just still in the middle of the range. I mean, come on, it's not moving there at all. 103.50 area. If that breaks, there could be a substantial move down in the dollar. So we talked about that one yesterday on the stream, but that's something to keep an eye on. The 10-year, check this out. Here's the 10-year over the past couple of months, or really the past couple of weeks. So we have that push of 4+. It just got rejected here at 3.9%. Now it's back down under 3.7% right now. So if this 10-year move is actually going to continue down, I mean, if you ask me, there's probably a much stronger likelihood that this goes down further rather than going to new highs this year. That's my take on it. As we get ultimately, as time goes on, we will get closer and closer and closer to the Fed ultimately eventually turning around. Now they will. The thing is, I don't care about when. I'm not saying, the Fed's going to U-turn, on July 8th, I don't know, of this year. They will. The thing is, the bond market's going to be way ahead of that. So the bond market's going to move months ahead of the Fed, starting to turn around on rates. So that's the whole point about playing the bond market, which I think is interesting to watch and pay attention to. So SPY just ripped up into the close. Check this out. Now it's up 0.7%. So SPY, man, you thought when you think it's dead, it's not. This past couple of weeks, if you are contrarian across of intraday and whatnot, and you want to take a shot for reversal, great. The problem that I guess the biggest problem for me is that I haven't been seeing as much confirmation of reversals and then enough time to get in with a relatively decent risk reward profile, because these moves have been so choppy and they've been aggressive, up, down, like just pretty quickly. So pretty strong close here. SPY is going to close. We got another 20 seconds to go. SPY looks like it wants to close up around 384. Down $10 a week. It's not too bad. It's not too bad. Just, honestly, a couple wings from Wingstop. Down a few wings. NVOS dropped to 16 cents on a very high volume. Yes. This is another one that I would be keeping an eye on. I think SPY just closed up at 383.73. This one may be. It's down another 10. It was down another 10% today. It hit. Yeah. Oh, yeah. That's very high volume. This is interesting. This is very interesting. Okay. The only concern, the only problem, I guess you could say, is that it had some sort of pump and flush. The problem with that pump is that I think it caught some people in it. So it's going to need to flush out. When we talked about it yesterday on the stream, it's probably going to need to flush out a bit more to really wipe the floor with any retail guys who thought this was going to bounce, right? The gap fill potential here is insane. This may very well be one of my next plays. I'm thinking about adding in as a small position for one of those small cap swings. I think I'm going to up it a tiny bit, because I'm seeing some good confirmation that this stuff is working a lot better than I had originally, suspected, or was a lot more cautious early on. But we've been finding a lot of great plays, just little by little. So cool. But I think this could easily bleed out down towards 10, 11 cents for all we know. But the more downside that we see, the better opportunity, because the volume is huge here. Let's just double check that. Let's go to Seeking Alpha and just see if they've got any news. Let's just double check. I'm curious what the cash position is and all that stuff. I don't know why EVFM. I have whenever I type in Seeking Alpha, the link that auto populates is this, and it always goes to EVFM from 2 years ago when I was looking at that stock. But I guess I looked at it a lot back then. They announced receipt of notice from the NASDAQ, so they're probably screwed in terms of delisting status, right? So they haven't. No, they got, let's see. Received a notice from the NASDAQ. Failure time to file annual report. Okay. They have 60 days from receipt of this notice or until February 13th to submit a plan to regain compliance with the rule. So they didn't file a 10K on time. back in August. They're also way under the $1 minimum. So they have about a month, a little over a month, to submit a plan to regain compliance with the NASDAQ. If they accept, they can grant exception of up to 180 calendar days from the date of Form 10-K or until June 12th to regain compliance. The company, in response, intends to file a Form 10-K as promptly as possible in order to regain compliance with the rule. However, if the company does not submit the form by the 13th February, they will submit the company will submit a plan by such date to the NASDAQ that outlines as definitely as possible the steps the company will take to promptly file the Form 10-K and regain compliance. Okay, cool. So let's go to BAM SEC. All right, what do we got? Notice of late filing. They've got a material agreement, financial statement. Let's see what this is. This last 8K. Back on December 23rd. Share purchase agreement. Swag will be a wholly owned subsidiary of the company and will own title to the gems in which the company intends to either collateralize or sell to raise capital. Okay. Interesting. Yeah, the biggest thing that you're kind of concerned about, right, is if you're not filing your financial reports, right? There's probably a reason why. And it's not because you're behind. It's most likely because your company sucks and you've got no money. So Q3, let's check this out. Let's see what their cash statement or their cash balance was. They had about $12 million in cash back in May of this year. It's so long ago though, so you don't really have anything up to date, which is concerning. That's the only concern I would say. Well, that's the biggest concern. Loss from operations, 1.2 million, 2.5 other expenses, net loss, 3.7 mil. So if you're going to lose cost of rev, gross profit of 2.4 million. Yeah. $12 million in cash, you're not going to have that long with that. Did they do an offering? They did an offering, though, I'm pretty sure. Back in October. Is that not an offering? Yeah, they did an offering back here. So they raised cash, I'm pretty sure. So they should have cash. So they shouldn't have a problem with that. It's more so like file your reports, guys, That's what it is. But it doesn't, to be honest, that stuff doesn't matter. Like it does matter. Like you have to know these dates, like know by February 13th. Like if they don't file this report, they're screwed. They can get delisted, right? So like that's key. But realistically, it doesn't matter. Like these stocks are not running off of fundamental analysis. Like go look at the runs of JSPR and other stocks the past couple of days. Like those are not just because of the PR. They're not just because this is the next best thing. Some of the stocks run, some don't. If it's going to go and if this is just a manipulation and they're loading shares and it goes, it's going to go. And it could go a couple 100%, right? Fill that gap up to 60 something cents or 60 cents from 16. You do the math on that. That's a killer gain if it did that. It's 300%. Like, oh my gosh. So if the same pattern repeats, I think this thing from anywhere from here down could be lucrative if it repeats and this volume is bigger money loading and just kind of washing out the retail guys, only to run this thing up in the coming sessions. They got about a month and a half though to get their shit together. So that's where we're sitting at. They got about a month and a half to get their shit together. Threw me off. Cows in the house threw me off. You're on. Yeah, I figured that I did yesterday. I usually try to do 3 a week, so 3 per week is generally the plan. And I enjoy doing them more than to other things, So if we have a day off one day, I'll fit it in for the most part. Try trading later in the day, less the opening hours. Yeah, if it works for you. I feel like most people tend to find the midday the worst. But I think that a good risk, or you can't make the rules, I think, until you have the data to back it up. So if you got the data that says, oh, I suck, from 9 to 10 a.m., you don't touch 9 to 10 a.m., or the opening, right? Data says you suck at power hour, then you don't come back for power hour. You don't open up that brokerage account and during power hour, So that's the biggest thing. Absorb the experience. That is what it is all about. So based off this close, before we wrap things up, based off this close, we are skewed to the higher end of the range, and it is up above 383, which was like kind of the top end of the range. Now, we had mentioned 383. I had been mentioning that, and we've overshot that a couple of times on some false breakouts today, yesterday included. So really, we're looking for a little bit higher. But the good news is that higher lows compared to yesterday, and we're skewed closer to those highs. 10 years coming down, 10 years at 3.68. Some positives, I guess, going for the market right now. Still need to hit the scanners. Yeah, I think before I enter the next small cap, maybe it's tonight, maybe it's tomorrow, maybe it's on Friday's stream, for all I know. Maybe I'll hop on Friday if I have the time. We'll hop on an hour earlier, and we'll do like an extra hour of scanning, and we'll enter a position or two. Or I need one. I don't need one, but I'm looking for one more small cap to add to the list. I think 3 at a time is fair right now. 3 of those similar setups. We can look through the scanners and see if we find anything juicy going into the end of the week. As we move forward, right, looking back, I was looking back through this in the past. Generally speaking, January, February, decent. As we move past Feb, we tend to not see that this strategy works as well in terms of small caps. So we'll have to keep an eye on that. But I think it's as long as we keep seeing the similarities occurring in these, bottomed out 52-week low manipulation, high relative volume plays, if they keep running, then we'll keep playing them, right? We'll keep looking for the next one. So that's what it's all about. Short-term pain, long-term gains, like the gym. Dude, the gym, I went to the gym late yesterday. I went to the gym last night at like 9. I don't usually go at like 9:30, but I was there at 9:30 last night. And I don't know what it is. I was like, I was doing incline bench, and I've been really trying to push the strength. I have like 2 strength days a week and then 2 like higher rep days per week. So I lift 4 times a week now. It's a pretty good like recoverability, I guess, if you want to call it that, strategy for me. Everyone's different. This way I'm not going every single day, and then on the days off, I've been really trying to push stretching and then also cardio, because my cardio sucks and I can't run very long, very far. And so I want to improve that. Goal will be to do a half marathon or a marathon at some point, maybe this next year or two. Just for fun, not really just for like no time, goals, just for fun. But I want to be able to do it. I could do it, I'm sure. It would just be horrible, and I would almost pass out and die if I did it now. That's my goal. But I think, I don't know what it was yesterday, but I'm like, after like a heavy set, I literally come up off the bench and I need to hunch over, pull out the headphones, because the music is like making me want to freaking, I don't know, feel like I'm going to vomit or something. I'm like at the brink of, and I've like never been like that. So something's going on. Either I'm just stressed or whatever, and it's all coming out at that time, but I got to calm down. I got to get myself to calm down. It's never been like that when I go to the gym. I used to always be able to get like super hyped up about hitting a heavier set, hit it, and then feel like almost euphoric after you hit a PR, and then like it's like it kind of propels you through the rest of the workout, and then you crash hard at night or after the gym. But geez, I was like crashing in the gym. Maybe it's because I went late. No dopamine rush trades, longer term success. That's what it is. That's what it is. I mean, this week you'll see. I'll show it this weekend. We'll see how the next 2 days finish. They're technically only half a week in, but it looks like I'm gonna have, in terms of a win percentage, like a horrible week, like absolutely horrible week. But technically, I'm still green. So So, you could somehow do that. In my view, that's a pretty big win, even though you're pissed about how things have gone. It's a pretty big win because, you didn't give back a crap ton of money. That's a positive. Maybe next week you see things better and your win rate goes up and, you dial it in and boom. 6-day split instead of 3 days a week, full body. I've been doing push and pull. I used to do push, pull, legs. Now I just do push, pull. So it's on my push days, I'll do leg press or squats, and then I'll do calves. And then on my pull days, I'll do hamstring curls, as well as I'll also do leg extensions, which is just not really a pull, but whatever. I'll do hamstring curls, leg extensions on the pull days. But then also on the push days, I'm also doing upper body as well. So I do I think I have 6 exercises per 6 to 7 per workout. And I do that 4 times per week lifting. And they're roughly the same, slightly different variations or different machines on the higher rep days versus the strength days or the heavier days. The heavier strength days are more so the days where I hit more of the compound movements first and whatnot. But yeah, I just found that the 6-day split I used to always do that, but I've just found that I wanted to build in a better stretching routine, mobility, and then also cardio. And I figured that putting the cardio days, which are not anything crazy, but putting those days and the stretching days in between lifting days and kind of just doing that 4-day split per week and then having those other days kind of as filler just seems to work pretty good for me right now. So I'm going to run with that for this next couple of months and see how it goes. But with that said, we're getting on to other topics here. Hopefully this was helpful. Hopefully you guys get something out of the streams. We'll do one again on Friday. Tomorrow, we'll see what's up. I don't know what's tomorrow. What's tomorrow? I have no idea. Tomorrow's Thursday. We'll see what happens tomorrow. Hopefully we get better direction. We are up towards the upper end of the range, so we'll see. I also added a few extra bucks into my futures account, so maybe there's something to work on there in the future. Get it? But yeah, we'll mostly be following and paying attention. I didn't really touch a small account this week. I had one. I traded it yesterday. I had 3 trades, 2 losses, 1 win, but I was green by a few bucks. I'm good. I'm good with that. If it wasn't for that JSPR small cap on Tuesday morning, I'd be red this week. But outside of that, we'll see what happens. We'll see what happens tomorrow, and we'll be back at it again. So thanks so much, guys. I'll see you in the next one. Peace.